We have Andrew Holland joining us, the CEO at Avendus Capital Alternate Strategies this morning. Andrew, good morning and thank you so much for joining us. I'm going to start off with the obvious questions, and that has to do with the NBFCs right now. How would you distinguish between the relatively larger ones and, well, to name them something like an HDFC or, for that matter, Bajaj Finance, as compared to some of the relatively smaller ones such as Diwan Housing Finance? What would your approach be, especially considering we have seen so much volatility in a lot of these names?
You know, sometimes it's, the easy answer is sometimes it's just it's better to sit back and let some of it play out. And then, you'll fortunately or unfortunately, whichever way you think about it, everyone gets tarred with the same brush, the good and the bad and the ugly. So you sometimes have to let that kind of play out a little bit in the initial stages. But I think, LIC's announcement yesterday, or statement saying that they would, bail out or would not let ILFS collapse, is really a kind of a semi-government backing to say that, we're going to sort this out. So I think, if that is the case, liquidity can be, kind of put into the market through the RBI. So I'm becoming a little less worried about this whole episode in the very short term, and feel that the quality stocks, the large cap NBFCs, have just been hit for no rhyme or reason along with the whole thing. They'll be the first ones to recover. I think there'll still be question marks over the smaller ones where share prices have fallen a lot more significantly, because market. To my mind, market sometimes knows more than I do. So I think that it'll take some time for those companies to hopefully consolidate from where we are and then gradually kind of inch up. But this is just not about the NBFC sector. It's about the whole of the market for the past few months. You've seen a lot of the large cap blue chip names kind of coming down, and the index being propped up by I would say second line kind of companies, and I think that switch back to quality and back to the blue chips will start to happen now, because the one good thing that happened is that we're now starting to price in risk, and risk was something that people were not remembering that was there. And once you get it in the bond market where no one really expects to lose money, then it does tell you that there are risks out there.
Andrew, good morning. Niraj here. Coincidentally, I just wrote about this very aspect that you spoke about today. The columns published today on the site. But just wondering, Andrew, I just wanted a small thought from you on this. The valuation multiple contraction that has happened for a lot of these poster boys, as I have called them in my column, haven't still brought them down to numbers which are mouth-watering. I mean, HUL, even after this correction that we've seen of 8-9%, still trades in northwards of 50 times, 52 times 1 year forward multiples. Bajaj Finance, 7.5 times price to book. You can argue that Maruti too, despite that 2,000 point fall, is not exactly cheap. You mentioned that the revert back to quality can happen. Is it too soon? And would you believe that there needs to be some more pullback before that revert can happen? Or would you be comfortable putting fresh money to work in the blue chips?
See, I think at the peak of the fall recently, we became a little bit more constructive. As you're aware, that we've been quite cautious about not only the Indian market but global markets, and that's somewhat played out in the past few days or past week or so. So if I'm looking forward, which I try and do in that. What do I see ahead of me? Well, I see 3 or 4 things. One is that we'll see an interest rate hike tonight by the Fed, that's for sure. That's been pretty much baked in. We will have to wait and see the commentary. The second point is, I think the optimism before the midterm elections in the US will probably favor a trade deal. So I think that will keep markets kind of more optimistic than pessimistic, at least in the first half of October. And then, a lot of the negativity around emerging markets, a lot of global brokers have now turned that around and said, it's time to buy. So what you could see is emerging markets start to recover from their, that they're more beaten down than the NBFC sector, I can assure you, which will probably drag India. Now, relatively, we might still underperform, but we'll drag ourselves up. So this liquidity issue that we've all been thinking about, seems to my mind, LIC is there, so it's a backstop to some extent. I'm sure now we'll just go into what the real problems were in the companies. And therefore, what's going to lead the rally is going to be the blue chips, which I'm saying, usually in these kind of circumstances would be the ones that hold up, but they actually fell before the before the market fall, which is what I'm trying to say. This dichotomy between the blue chips, which were being derated, which we couldn't work out, to companies which were just trading ahead for no real reason.
But Andrew, then that brings forth the question that if LIC or any such government institution is the backstop for the NBFC space, what's the backstop for EMs which will face pressure because of, one, the dollar strength and their respective currency weaknesses, and crude, which is, well, for now firmly above 80 and headed to maybe higher levels. No one can predict crude really, but if experts are to be believed, there is more upside here. And what's the backstop to such a problem for EMs?
So I think if you think about it, the currencies in most of the emerging markets have suffered very badly. If I just take the not just the currencies, but the markets. If I take China, for example, I think the currency is down about 10% or so, and the market's down 25%, and I can go on in Argentina and Brazil and anywhere else. So, a lot of the damage has already been done on the basis that interest rates are rising in the US, and for the first time in 8-10 years, we're having to price in higher short-term interest rates on debt, which is 2 times larger than it was in 2008. So all of that's, I think, been priced into the emerging markets. So I'm not saying that things will change so dramatically, but if you do get some kind of conciliation in the trade wars, then obviously these emerging markets will benefit from that in terms of their exports going forward. So that's that's what I think is the play for emerging markets, and the valuations there are very compelling. In a lot of the places of 10 to 11 times, and that's where I think the action will be. India has relatively outperformed because we're seen as a defensive market in a trade war because we're a domestic driven economy. So that swing will change towards emerging markets. India will just get dragged up.
Right, Andrew, I do want to talk a little more about crude. At $80 a barrel, we have seen a little bit of a rise in a lot of these crude-linked sectors, specifically oil exploration companies as well as oil marketing companies. What's your view here?
So I think, let me put it 2 ways for you. And it goes back to if we have an escalation in trade wars, which if we do, then I see the oil price coming back towards the kind of 70 level very quickly. If we don't, then obviously you could see it getting towards that kind of 90 level very quickly as well, which doesn't bode well for India. So actually, a no trade war is not a positive for India relatively to other emerging markets. So that's one thing I would say. I think the currency, which had been stable for so many years, was actually overvalued. And I think the real value is around 72. I think that factors in where the oil price is today. Could it slip a little bit more? Yes, but I think if there's no trade war, then I think prices anyway will drop globally. So deflation, a little bit of deflation will come into the global economies. And that will stave off probably interest rate rises in the very short term, and give us the opportunity, therefore, then to kind of see that the liquidity is in our system, and offset some of that rupee depreciation. The thing about OMCs, which is the question you asked, is that I just don't know when the government will intervene. They haven't intervened. Maybe they will nearer to the the elections, the state elections in November. It's just odd that they haven't, given where prices are. It's the right thing to do nothing, don't get me wrong, but I think we'll see some action from the government as we get towards those state elections.
Right. Andrew Holland, we leave it at that. Thank you so much for joining us and taking us through your views on the markets.